Hey everybody, it's Pete. Good morning. Welcome to Stock Trading Pro. I gotta make sure my microphone's on. We got a lot of stuff we're going to talk about today. We're going to talk about the massive day trading volatility that we have right now. We're going to go over a couple of day trading strategies. It's Friday, so every Friday we dive deep into our coaching call from last night. We give you guys some things to think about over the weekend, some things to up level your game. I'm going to talk about a day trading book, one of the very first day trading books that I ever bought. It's definitely dated, but it is something that is helpful because classic trading strategies are timeless, and you're going to be able to use them. A lot of the stuff talks about level 2 and that kind of stuff, which is definitely applicable, but it's one of the first books that I actually learned about order flow, following the smart money, that kind of stuff. We're going to talk about that in a second. But the big thing we're going to talk about today specifically is day trading easy right now? And I want to say this in context, and I want to put this right at the beginning of the video so I'm not misquoted, okay? This is necessary, required, okay? Day trading is not easy, but we want to talk about that today because whether it's day trading or swing trading, it doesn't really matter. It's whether or not you have a strategy, whether you can follow the strategy, whether you can kick out your losses, and then ultimately get to the point where you understand how to hold your winning trades longer. Now, I want to bring this home in a big way because we're going to dive into this. And this move yesterday in the market, and I know John Oakes is on the call right now. I know he has a lot of experience. I'm sure when I put that title out there, he's like, what is he doing? This is why I put this out there today, okay? This from yesterday. That is literally the price action that Starbucks traded in yesterday. Now, these are not isolated incidents. And I want to be clear about this. I'm trading for 22 years. I want to be clear again. This is the reality. Okay. Day trading is not easy. But if you have a system, you start to stack the odds in your favor where it becomes a really, really fun way to make a living. The toughest part of day trading by a mile is being okay with doing nothing and actually putting in the work to be prepared before the day starts, building your day trading strategy, and then actually following it. So we have a bunch of stuff I want to talk about today. The day trading side of thing is my specialty. If you don't know, I had 2 firms in New York City. We had 300 people trading our capital at one point. Day trading is a big part of my life. It's actually been something I kind of grew up with for now. So stick around. This video is going to be awesome. We're going to cover a lot of stuff. Again, like I said, we're actually going to do a deep dive into our coaching session from last night. You can actually see over here, it was 2 hours and 12 minutes. We have a bunch of stuff that we're going to talk about. So stick around. I promise you today's video is going to be one that you're going to want to watch. Okay, so thank you so much, everybody. I think the first thing that I want to do, obviously, I want to touch on what we launched today's conversation about off of the Starbucks move from yesterday. But Starbucks wasn't the only one, and this is really why I want to bring this up. We actually had Starbucks yesterday. We had Datadog yesterday. And again, I just want to give you some of the context of some of these moves from a percentage gain, okay? This is a 20% move from yesterday's low, okay? AMD yesterday, from yesterday's low. 8.6% from yesterday's low. Now, what's crazy, absolutely crazy about these moves, when I first started trading, and I don't want to make myself sound like I'm an old coot on the day trading side of things, it used to take a stock a month to move 8%. Never mind 3 hours. This is an amazing time to learn day trading. Now, we're also going to get into a question that was asked last night, which had to do with day trading versus swing trading. And I want to point out the question on yesterday's coaching call. We're also going to talk about Elon Musk today, the conversation about what he said about cutting jobs. Is Tesla in trouble? We're going to talk about that today and how to trade it. We're also going to talk about Walmart really stepping up to compete with Amazon Prime for deliveries. That's going to be a big topic we're going to talk about today as well. So I want to dive into that question because it's very, very important. Okay, and we're going to go over here. And we're going to scroll down. So we're going to go over all of these, but this is what I want to talk about right here. Jealousy and the fear of missing out. Swing traders being jealous of day traders being jealous of swing traders. And I'll give you all the stuff here. You can see we'll go over these step by step, but I want to get this across. During the pandemic, day traders were watching stocks kind of grinding it out. We're making new 52-week highs. It seemed like pretty much every day. I think in 2021, we had something like 54 new all-time highs. And that was a moment where you saw a lot of people who, and maybe you know, like Scott Henderson's here with us today, maybe you know some people that know absolutely nothing about the market, which that's not Scott. I know Scott has experience where their accounts are going up every day. No, they don't know livestock from common stock, and they're making 25, 30, 30% a year. And they're like, is that good? They have no idea how they made it. So day traders are watching these complete newbies, know nothing about the market, and going up every day and making these amazing gains. So day traders at that point were kind of jealous about the easy profits. Again, I'm using easy in quotes that the swing traders or the longer term investors were making. The problem was half of them had no idea exactly how they were making that money. Now the tide has turned where inside of our community, which again, the day trading part of the things, it kind of gets the love, I guess, to say, like, you want to be a professional. You don't want to be at your job anymore. You want to be semi-retired. You want to day trade 2 hours a day. Plus, you hear us talking about some of these kinds of ideas that are unfolding during the day. And again, Datadog was a absolute beast yesterday. Even the SPY actually closing at the highs. But I think Starbucks really brings this one home the most. So the question that got brought up by somebody yesterday, his name is Ed. Ed brought up a question: I'm having fear of missing out. I'm having jealousy about all of the day trading activity. How do I start to dip my toes into the day trading side of things? That's what I want to talk about today. But I want to give you this book because it's a very dated book. But this is the title of the book. I don't know if you could see it there. The Electronic Day Trader, and Mark Friedfertig and George West. I want to say that this book is probably from like 1999. Actually, it might even be. I could get you the exact on it. And I want to tell you because it's actually, 1998. That's how old this book. So it's definitely a little bit dated. But you see, I'm a big investor in educating myself and constantly getting better. I would never tell you to spend money on a book if it wasn't worth it. This book is worth it because it really breaks down pre-market. It breaks down the day trading process. It breaks down why stocks move intraday, how market makers and specialists, especially back in the day, actually followed the price action back and forth, how market makers and specialists were required to take the other side of a trade. If you can think about a move that moves really fast in the morning and market makers and specialists being on the other side of that trade, that's why stocks tend to pull back at a certain time during the day, because they're actually liquidating those positions that they were on the wrong side of the market. And when you start to put those pieces together, day trading kind of has a really good process. Actually, hang on one second. I have to boot somebody out of here who's posting some bad stuff that we don't want in there. So sorry about that. Somebody just posted stuff in the chat that we don't need to see. So anyway, again, I need to do this. Please bear with me just for 1 second. Okay. Day trading is not easy, but so how do you take advantage of the kinds of opportunities that we're looking at yesterday? The first thing I want to talk about is Ed's question about being jealous of the day traders, because we actually have some amazing, amazing opportunities on the day trading side of things, to the point where the way that we read the market with the market internals, the way that we put together the VIX, the ticks, the advanced decline line, sector rotation, which is kind of what we're known for, also order flow, tape reading, and sector rotation. We have this complete map of knowing exactly when to do something and exactly when to step on the gas, exactly how to trail profitable trades. But more importantly, and I want to highlight this from yesterday's opening hour of the market, and specifically I'll show you in the SPY, in order to understand how to successfully day trade, use day trading strategies to feel like and expect every day that you have a really good chance of making money, you need to know what to look for. We talked yesterday about what perfect looks like, and then everything else kind of works away from perfect, okay? Here's the thing. Yesterday, the first hour of the day from a day trading perspective, and a lot of people might not expect me to say this, there's really no other way to put it, is that there was pretty much nothing to do for most of the first hour yesterday from a market perspective. And being a professional day trader, you have to understand when there's something to do, how aggressive you should be in that moment. And we talked yesterday about trading for cash flow versus trading for longer term intraday trends. We talked about what type of profit maximizer you should use in different market conditions, which is momentum versus, yeah, let's go for that bigger move. After the first hour yesterday, the market internals lit up. And again, I'm giving you strategic things to think about using the VIX, using the ticks, using the advanced decline line, putting all the sector rotation into perspective, and then understanding how that translates into day trading consistency. And again, isn't that really all we want? We want consistency. You get paid every week, every month, every 2 weeks, whatever it happens to be from your job. Traders are looking for consistency from a month-to-month basis. A big part of the mental aspect of day trading specifically is you're going to have a lot. You're going to have wins, you're going to have losses, you're going to have wins, you're going to have losses. But you need to mentally be okay with understanding that that increased activity is simply amplifying how fast your edge could end up playing itself out. So I want to go back over. I want to talk about a couple of stories from yesterday, but I want to get into the SPY, and we're specifically going to look at it on the hourly chart. So if we bring this over here, and I want to go kind of hour by hour, which would be a pretty big deal, like right there. Right there is the start of the second hour. And if I clone this, obviously right here is the start of the day. So you can see this first hour was basically a chop fest, But I want to highlight this level right here, right there. Now, a lot of people understand on the day trading side of things that there are certain price points and certain levels during the day that matter. So I want to teach you these things right now because we spend a lot of time here talking about swing trades. Day trading is a little bit different. When we talk about this, I might have mentioned it recently on a call, but day trading versus swing trading is like baseball versus softball. Baseball and day trading, you need to make a lot of fast decisions. Softball, you can go have a beer and think about what you want to do today, and you'll take action tomorrow. It's very different. But from a day trading perspective, here's the thing you want to be saying to yourself all day. And I want to highlight this because this will make your day trading a lot easier, okay? And it comes down to this, okay? Day trading can be a very emotional thing, okay? You could be, as it's moving fast, as it's moving, you need to be able to anticipate, okay? So all day long, if you happen to be day trading right now and you're in the markets every day and you feel like you're getting bad entries, you feel like you're getting bad exits, you feel like you're overwhelmed from a day trading perspective, just listen to what I'm going to say right now because it will change absolutely everything for you. Every single moment that you are watching your stocks during the day, every single moment, and I'm not exaggerating. If you could think about you're playing football or baseball or basketball, whatever it happens to be, when you're done, if you played well, you're exhausted, right? You're physically exhausted. Hang on. I don't know how this knucklehead got back in here. If you're physically exhausted, you have to be working really hard, right? Day trading, that same work happens mentally. You should be exhausted by the end of the day because you're thinking the entire time. You are planning for what you plan to do before you need to do it. That gets you better entry. So, for example, a stock is rallying and pulls back and holds volume weighted average price. So we can give you an example of that right now. And let's use the SPY as an example. And let's actually bring this indicator into the chart. So looking at the 5-minute chart and looking at the chart over 2 days, was the price below volume weighted average price for most of the day? Or when did it get above? Is it below or is it above? And how does it translate into ideas? And you can actually see here, there's 3 different days of price action in the SPY. So one of the things you need to be saying to yourself is, if the SPY is above volume weighted average price, what does that mean? If the SPY is also positive from yesterday, or the stock, whatever stock it happens to be, is it above? If it's above volume weighted average price, then I plan to do this. If it's below volume weighted average price, then I plan to do this. If the stock has rallied strongly above volume weighted average price, then the next entry, I'm looking for it to pull back. These things are get you better entries. Now you're in the trade and it's starting to move in your favor. And we're going to point out a pretty dramatic trade from Datadog yesterday, and I actually just showed you this. So if you are thinking about how you're placing your trades and you have a stock moving in your favor, and pretty fun last night on the coaching call last night, because a lot of the questions last night were about how to implement what we call the profit maximizer. And I was like, Mike, where are all these questions coming from about how to implement the profit maximizer, which is essentially one of 2 strategies that we have when stocks are moving in your favor, you want to make sure that you maximize your win on that trade, because a lot of what we do is we don't focus on win-loss percentage. We focus on ROI, return on your capital, return on your invested capital, return on your trading account. What percentage did your trading account go up each month? That's what matters, not the win-loss percentage. And I'm just going to prove that to you right now. We get so many people that come in, oh, what's your win-loss percentage? Some option guy said it was 90, his is 90% and blah, blah, blah. If I told you right now, you'll make $10,000 this month trading, you'd be like, yeah, let's sign up for that, right? Some people here would love to replace their job and do that again, but I want to put this out there again. I got to keep doing this because it's a part of what we're talking about. If I told you that right now, and I said you were going to place 20 trades this month, but only 4 of them were going to be the reason, the big winners that got you to that plus $10,000, would you care that you only made money on 20% of your trades or 30% of your trades? No. So it's important that you shift your focus, that the real skill in trading is understanding how to hold your winning trades longer, which means you understand the conditions for when that happens. But this is a thing as well. How do you understand when market conditions change and now it's time for you to exit those positions? That's a big thing. Or at the very least, we call it there's a disturbance in the force where you bought the stock, you day trading it, it's going up, and all of a sudden something changes in price action. Now I'm going to pull up a stock, and I want to just give you an example of what I'm talking about right now, because it's kind of cool, quite honestly, and I kind of really like to teach these things. So what I want to get across is this. So I'm going to pull this stock up right now. This is from yesterday, and we just talked about how big this move is. The low of the day yesterday, let's say right around 96 and change, all the way up to 116, right? A monster move. Now, you're in this stock. You're in our community. We're going back and forth with questions like, how do I manage the stop loss on this thing? How do I manage the trailing stop? Should I be adding to this position? What should I look at in the market internals to tell me that this move is still valid? What should I look at in the sector that this stock is in to tell me that this idea is still valid? But there's one further piece from that, which is volume. So I want to get to that again. And remember, this thing is screaming to the upside, screaming to the upside. Now I want to walk you through how I coach everybody during the day. And I'm going to actually see if I could pull this up from yesterday, because I apologize, it's actually not here yet, but it's very important. It's very, very important. So I want to walk you through this. So if you could take a look at this from yesterday, you'll see that this was 205 yesterday. You could see that I highlighted the volume that spiked into this idea while the stock was still going up. You can see I was still working the idea, but as it's going up, I pinpointed that. Now, we're talking about day trading strategies. We're talking about price action, volume. And I want to highlight a question from last night's coaching call. And before we finish tonight, I'll let you take a screenshot of all these questions. Okay. So here's the thing. This thing is going up. It's going up. It's going up. Now, I want to bring you over to the conversation that we've been having about volume. Okay. Volume is a big part of our question. If you want to, you can take a shot at these, but interpreting volume signals, above average volume spike, exhaustion, and breakouts. So what we're talking about here is what we spotted here. So again, you can see that this thing is still going up. So if you're not, if your day trading experience just needs to level up, but you really want to start to get to the point where you're understanding what day trading means, you have a day trading strategy, but you want to implement it. These are the little things that this thing is going up. It's going up. It's going up. But I sat up in my seat and I'm like, okay, something different just changed. Now we need to make a decision. Do we move up a trailing stop? Do we start to book profits on these kind of trades and look to hang on? I'm sorry, I got to keep booting this idiot out. He keeps jumping into the chat with I'm sorry, these people are idiots. I'm very sorry. Okay. Anyway, here's the point that I want to get across. If you were day trading and you're watching this go up, it's meeting all the criteria. It's positive from yesterday. It's above volume weighted average price. But then you notice something like this. And again, this is timed yesterday. You can see it was 205 yesterday. Okay. Disturbance in the force in DDOG. So what does that mean for you as a day trader? You're day trading long. You're buying the stock. It's actually going up. What does that mean for how you plan to trade the stock? Does that mean you just get out of the trade? The answer is no. When you see what we call exhaustion, when we see what we call potential distribution in a stock, that's a potential change of trend, but you still owe it to yourself to give the stock a chance to move higher. You always want to you never want to put a limit on what you could make on a trade. You do need to know your initial profit target to justify the risk on the trade, but you still need to give your stock a chance, because remember what I said before about 20% of the ideas paying that entire month. This is the kind of trade that I'm talking about. So if we go back to that chart, and again, this was at 2 o'clock yesterday, and we take a look at D-Dog. Now, if we add the volume into this equation, you can see as it's going up, that's usually pretty good, right? So what we talk about is as stocks are moving up, you want to see buying pressure in that direction, and that kind of validates it. As the buying pressure goes up, again, it doesn't matter if it's day trading or swing trading, that's actually good. That's what we want to see. But if that buying pressure goes sideways and the volume remains strong and you start to see the stock churning, that's what we call a disturbance in the force. That means that something in the order flow has changed. Now, I want to walk you through something that's very, very interesting from yesterday because it applies to this idea, okay? So we called it out at 2 o'clock, and you can see the volume. We start going sideways. Volume still stays heavy during this pause. You can see this volume compared to this volume on the move up, right? So at that point, somebody in our community had asked me, I know it's tempting. I know it's the wrong trade. I think at that point, the stock was up something like 16.5%. And it's something that every day trader has thought about in their career. The stock is going up. It looks like it's changing. It's gone too far. If I put on a short sale in this idea right now, if it falls down, it could be the most amazing short sale, and I'll make all this money because I got the top because it went too far, okay? Now, my suggestion to this person was no, absolutely not. I did that a lot during my career, and it was probably one of the biggest mistakes that I made as a young day trader, where this thing would be going up and it'd be like, wow, it's gone too far. It normally doesn't move this amount, and I'm going to put a short sale on this thing and looking for the big reversal. 9 times out of 10, 8 times out of 10, it just kept drifting higher, and I would lose money on that trade or take a small loss. 1 time out of the 10, maybe 2 times out of the 10, the thing finally rolls over and it's a win, and I validate the strategy. So I want to walk you through what happened in the trade, because I want to be clear. I told this day trader not to do it. Do not short sell this stock because it's not the best trade on the board. There's other trades you should be buying at this moment. So again, I want to talk to you as an educator and as a friend, because I told him do not short sell it, okay? So as the stock unfolds, it ends up falling down $6. So his idea of short selling this idea would have worked out. It would have been a profitable trade. Now, here's where you're going to separate yourself from somebody who is a dabbler on the day trading side of things, from somebody who is going to listen to what normally happens and always position yourself to make the most money. The fact that this stock went down here after being up 16% does not make it a good day trade. And I'm going to prove that to you right now, because we had the same exact thing happen here, and this stock just kept charging and charging. You can see volume spike, volume spike, volume spike, heavy volume, and the stock just kept going up for the rest of the day. This is what normally happens. Here's the distinction for a day trading perspective and to level up your game as a day trader. When you position yourself on the same side of the order flow, those are the better trades. Those are the trades that will pay you on a consistent basis. Looking to take a shot on a trade that is up 16% that day and talking yourself into this is a really good idea, you are not going to make money on a regular basis. I'm telling you for a fact, because I've made thousands of those trades in the first 2 or 3 years of my career. And that's not an exaggeration. Back then, when you were full-time trading, sometimes you would trade 100 trades a day going back and forth. Short selling strong stocks is a losing game. I can't express it strongly enough. So although that trade went down, as the trader talked about for the position, it's still not a good idea. I want to get that across. So what am I inspiring you to do? Obviously, today is about day trading, right? If you happen to be a full-time day trader or you're thinking about becoming a day trader, day trading is a skill. And it's a skill, quite honestly, that is not that challenging to learn what to do, but following classic day trading strategies is the hard part. And again, I talked about this. If we go back to the chart of the SPY here from yesterday, the S&P 500 right here, you can see the first hour of the day, we basically chopped around before we started to make this move and price started to close above volume weighted average price. You did have one opportunity here where the market and the stock just exploded through what was the high of the day at that point. Now, would you have been a buyer on this particular trade? And I want to be clear about this. Absolutely. We were looking to be a buyer based on the recent buying pressure in the market. Now, this is the mental part of day trading that I want to get across. And I'm actually going to clear up these signals so you can see exactly where this happens. So right here is the high of the day, right? At that point. So we're going into the day and we're saying we want to be a buyer because of the way the market's unfolding. This giant candlestick right here took out the high of the day. And now you're sitting in your seat. You're like, yeah, here it comes. We're looking to day trade. We're buying pressure coming into the day. Stocks are rallying. Everything looks good. I'm going to buy this breakout. Now, this is what's going to separate you from somebody who says day trading doesn't work from somebody who is in our community. You say, okay, that was a good idea. It just didn't follow through. So this is the mental part of trading that is the exhausting part. The if-then. If this happens, then I plan to do this. If this breakout follows through, great. I'm going to look for a spot to either add to it or I'm going to look for a level where I'm going to book profits if it slows down. If this trade breaks out and pulls back, I'm going to kick it out because it didn't do exactly what I thought it was going to do. Then I'm going to go look at another trade. All of that. You should be exhausted by the time the end of the day comes if you're day trading because that's what it takes. It's not complicated. If this happens, then I plan to do this. If this happens, then I plan to do this. So this trade, again, I want to get this clear. This trade broke out, and when it breaks out, the stop loss on that trade is actually the candle that broke out because the reason for that is real breakouts follow through. It doesn't matter if it's a swing trade, doesn't matter if it's a day trade. You take a trade, you have all the reason in the world, you built that argument, you're looking for it to follow through. If it breaks out and follows through, great. If it breaks out and doesn't follow through and pulls back, you act like a pro, you take the loss, and then you look for the next trade to make it back. This particular trade broke out, pulled back, and it was a losing trade. It did not follow through. It actually went right back down. But now, here's the thing you want to be thinking about. If the stocks break down to new lows in the context of the recent bullish price action, now we need to see, do sellers step up and push that stock lower? Do the market internals validate a short sale? So remember what we just talked about before with that stock screaming to the upside, saying short selling that stock was not a good idea. Okay, it was not a good idea because the thing had ripping momentum and order flow to the upside. Now, in this case, in the SPY, we're talking about the SPY at this point right here. And let me map that out. Right there is the low of the day. And right here, this candle, it actually took out the low. We did nothing because we're looking for buying opportunities, which happened. Then we came back down and we had a new low. Now, this big move to the downside took out the low right there. So what is a professional trader thinking about at that point who wants to be a buyer as that stock is taking out the low? Be like, okay, that's what a lot of people know as a new breakdown level for stocks. Yesterday's high, yesterday's low, today's low, yesterday's high, all those levels, the highs, yesterday's high, yesterday's low, today's high, today's low. Those are significant levels. But let's put ourselves into the day trading mindset saying, am I a buyer or seller going into the market this day? Plus, we just took a loss on a breakout that we really liked. So we already have one loss coming into the day. The market's making new lows, but our bias coming into the day is we want it to be a buyer. So as soon as the SPY took out the lows, the first thing I said to our community, if this breaks the lows, then we need to see if it follows through. If it doesn't follow through, then the short sellers are squeezed or on the wrong side of the trade. And if this thing reverses quickly, they're caught, and that's going to create a good opportunity because we have buying pressure. I'm exhausted even talking about it right now, but that's what makes trading so fun. If this happens, then I plan to do this. If this happens, then I plan to do this. I don't care if you're day trading or swing trading. You need to run these questions through your head. Why? Because it takes all the emotion out. You're not reacting anymore. It's not overwhelming anymore. You know exactly what you need to do before it happens. So what happened here? If the SPY, and actually I'm going to take it all the way over here, right over there. SPY pushed all the way down. If this follows through, we need to see if it follows through and gives us another candle like this. If it does not, that means that the early short sellers are on the wrong side of the trade. Well, the very next candle did not follow through. Now, if you remember, again, if you're a regular viewer of our channel, you know that when a stock trades down and reverses after recent bearish momentum, which we actually got here, bearish momentum, these two well-offered candlesticks, well, actually inside candlestick to well-offered, if a bullish U-turn happens after bearish momentum. So bullish U-turn means it traded below the previous candle, reversed back up, and closed above the open and closed above the previous low. Okay? Let me take this knucklehead out again. I don't understand why this person keeps popping in here. It's ridiculous. So anyway, it should have gone down. It didn't. It did reverse. It did close near the high. We just took a loss on a trade. I'm like, okay, let's see if we can make some money back. Now we're looking for bullish follow-through. What does bullish follow-through look like on the day trading side of things? Well, now we want to see this stock and the SPY specifically that went down. We want to see it go well bid. Well bid simply means higher highs and higher lows. Higher highs and higher lows follow through. And here's what we ended up getting right there. So we followed through as soon as 10:30 started. So now we actually had the next hour start right on the button. As soon as the first hour finished and we took out the lows and came back up, we actually had a new opportunity to be a buyer of this and the whole day reset. So the point that I want to make, we talked about, is day trading easy? Is day trading hard? Day trading is a job. Day trading is work. Day trading is something that you really, really need to be prepared to make money. If you are prepared and you have the questions like I'm talking about right now, it can be a really amazing, amazing way to make a living. So if we go back into what we're talking about here and we map out the rest of the day, the way the market unfolded, taking a loss on this first breakout. Okay, taking a loss on the first breakout, watching this price action unfold, looking to see if it follows through. If this breakdown fails, if we reverse, if we go well bid, then I will start to look for buyers. If we pause above volume weighted average price, I will look to be a buyer. If we get back above today's opening price, I will look to be a buyer. If it's above opening price, if we reverse, and if we're above volume weighted average price, then I'm stacking the odds of those day trades moving in my favor. It's kind of cool when you really put all those pieces together. So again, I want to say this again, okay? Day trading is not easy, but if you have somebody who is walking you through experience of what to do, what not to do, if you kind of that learning curve happens a lot quicker. You kind of knock your learning curve down because number one, you're reducing mistakes. Number two, you know exactly what to look at. That's when day trading become a really nice way to make a living. But it's the mental part of trading. And the big part of that, what I just talked about is, this must be a bot. I don't know what's going on here. This guy keeps making up new, it doesn't matter. If you want to be successful on the day trading side of things, here's the suggestion I want to make. It's not advice. This is all for educational purposes. I want to say this as clearly as possible. If you decide to jump onto the day trading side of things, the smart way to do it to start, I don't care how much money you have in your account, because things move so quickly, because there's pieces you need to learn to put together, the smart thing to do is do it with no more than 100 shares while you're learning. Everybody has a learning curve in the market. Everybody. I don't care who you are. The market will make you pay to learn how to trade in losses. It's up to you to learn how to manage yourself within the context of those losses so that while you're learning, you're not losing that much money, but you're gaining experience to understand exactly what I talked about. Now, the highlight of what I want to talk about here is very important. Okay, this is really one of the biggest parts of this. The very first trade that we took as a day trade yesterday, I absolutely loved. That was a losing trade. It looked like the market was collapsing. But because we went into the day, we wanted to focus on being a buyer for the day. Once this breakdown failed, now, and professional day traders call this buying in the hole. Buying in the hole. That's the language that traders use. Wanting to be a buyer as it's going down, and then as it reverses, you're buying as it's going down, right? We lost money on the first breakout. And actually, we were trading Citigroup yesterday. I want to give you, again, I want to be completely transparent about how we were day trading yesterday. Citigroup was one of my top day trades yesterday. And again, same breakout, failed. Same breakout, failed. And then it started to go sideways. So 2 trades in Citigroup. One was a small win. One was a small loss. Neither one of them followed through. So at that point, one of my primary stocks that I loved going into the day yesterday to day trade was not following through. So this is where you learn to work your keyboard and go deeper down into the list of stocks that you plan to trade during the day. That's where you end up making that money back in other opportunities throughout the day, which, as we showed you before, AMD, Datadog, the list just goes on and on. Zoom yesterday. We also had trades in CRM yesterday, which was the day after earnings. I just can't express strongly enough. I'm in love with day trading. I've been doing it forever. It's one of the most exciting skills you could possibly learn. It does require some work. Okay. It does require some work, but if you love the markets, if you love trading stocks, if you want to learn a skill to get to the point where you are in charge of making some cash flow every month, I just can't say it strongly enough. Get educated. Get a mentor. I'd love to be a mentor, and go for it. Now, again, day trading is not for everybody. I want to say this clearly. I just walked you through losing trades, stocks that came back, having the mental fortitude to go to the next trade. I can't say this strongly enough. Day trading will mess with your mind if you don't have a strategy. It is tough. A lot of people have a really hard time day trading because they don't have a strategy. They don't follow the strategy, and they have a hard time dealing with setbacks. If you're tough mentally and you are willing to learn, it can be a lot of fun, but it has a lot that goes into it. So if you are successfully swing trading and thinking about day trading, just listen to everything we talked about tonight, because I'm giving you 22 years of experience. That day trading can be a rewarding experience, but it's a lot of work, and you need to have a mentor. You need to have a strategy. You need to have the mental toughness to deal with the ups and downs every day. And a lot of people maybe just not there yet. All right. If you want to pursue it, we're getting a lot of people here asking about our community. If you want to learn about trading with me, especially on the day trading side of things, you could click a link below the video and you can learn about our 14-day boot camp. I'd love to see in there. We have a bunch of people here right now who are in our boot camp, who are in our community. We have some people in our community now going on 3 years. So I believe we have just the most amazing people in our community. I thought today was a good day to discuss day trading, because yesterday there was some amazing experiences. Again, if you didn't happen to see this, this is what basically we're talking about from a day trading perspective. These are the reason you day trade, for moments like that. But okay, it's moments like this where it's chopping around that you need to work hard to maintain your sanity. So if you want to pursue this, if you want to dip your toes in, gosh, I'd love to be your mentor. Click the link below the video, and I'd love to be your mentor. Learn about our boot camp. Determine if that program is right for you. It's only 2 weeks. It's 14 days, but you get everything from soup to nuts. This is how I am every day. Last night's coaching call was 2 hours and 13 minutes. Oh, actually, I don't want to forget that. Okay, so we're going to hop on over to that. If you want, you can take a screenshot of this. You can come back and watch the video. You can see last night's call was 2 hours and 12 minutes. You could screenshot this. You can watch it again if you want, and take a snapshot of all the stuff that we talked about last night. This is only one call. We have multiple coaching calls. This is only one from last night. A couple of things on the news I wanted to talk about. Walmart is looking like they're going to start competing with Amazon Prime. That's pretty cool. They're going to open up fulfillment centers, which means that they're going to start to compete with getting all those deliveries that everybody get. And then also the conversation about Elon Musk. This is a pretty interesting thing, talking about laying off 10% of the workforce on Tesla. And last time I looked, the stock was actually down pretty big, down $36 at this point. So anyway, some news you can trade. I hope that I inspired you to at least learn about the day trading side of things. But again, I want to tell you, I can't express this strongly enough. I'm doing it for 22 years. I love it. You can see how passionate I am. We have just some amazing people. If you want to learn about day trading and you want to do it with a really solid foundation underneath what you're looking at. You want to reduce the overwhelm. You want to eliminate the stress. You want to feel like you know exactly what you're looking at. Consider coming into the boot camp with us. I would love to have you in there. If not, obviously, if you're getting value on these channels here, do me a favor, subscribe, hit that thumbs up. Let me know we did a good job. I hope we provided value. If you decide to go it on your own, the biggest piece of wisdom, I don't want to say advice because I'm not a financial planner. The biggest piece of wisdom I can give you is if you've never day traded before, I think it's easier to day trade stocks than anything else because you could minimize your share size that you trade. Keep your share size down while you're learning because there will absolutely be a learning curve while you're becoming a day trader. All right. Have an awesome day, everybody. Thank you so much. Have a great weekend, and I'll speak to you soon. Thank you so much.